club isn't the best place to find the lovers, so the bar is where I go. Me and my friends at the table doing shots, tripping fast, and then we talk slow. Come over and start up a conversation with just me, and trust me, I'll give it a chance. Now take my hand, stop it, and the man on the jukebox, and then we start to dance. And now I'm singing like, girl, you know I want your love. Your love was handmade for somebody like me. Come on now, follow my lead. I may be crazy, don't mind me. Say, boy, let's not talk too much. Grab on my waist and put that body on me. Come on now, follow my lead. Come on now, follow my lead.
You don't know what you don't know, so you're right. It's not like, for example, you're going to culinary school. Well, this is where people mess up this industry. I don't need an education. Why? You need a college degree to get a job. You need an apprenticeship to become an electrician or a carpenter, right? You need to go to culinary school to become a chef. Why wouldn't you need one in trading? Well, you do. Okay, you just don't think so. But anyway, the core of a trading plan, guys, is basically the outline of what has to be in it and how that will relate to your daily routine. So here are some of the things you want to consider. What markets will you trade? NASDAQ, New York, Amex. Are you a Forex trader? Are you an E-mini futures trader? All right. Don't even mention crypto or binary to me, guys. All right. So anybody, I don't want to hear it. I don't trade those things. I never will trade those things. Okay. But anyway, you have to first decide what markets you want to trade. That's number one. I trade NASDAQ and New York stocks, occasionally Amex. I don't trade Forex, futures, E-minis, etc. And I'm not knocking those things. You can trade them. There's nothing wrong with them, okay? Patterns are valid in all of these markets, okay? So first decide that. Then you want to decide what kind of charts or indicators. Basically what I'm saying here is, what type of trader are you going to be? Are you going to be an intraday scalper or a day trader? That's what most people, but within the day trader mantra, okay, there are a lot of traders, right? There are all day traders that use 15-minute charts. There are scalpers that use 1-minute charts, okay? I think 2-minute, 5-minute, 15-minute are the most common, probably the 5-minute perhaps. I focus on the 2-minute mostly. I will trade 1 minute, like I just showed you on Apple. We took that today, right? I will trade 5 minutes. But if you're a swing trader, you're going to be focused on the daily and the 60. If you're a core trader, you're going to be focused on the weekly and the monthly chart. Okay, so decide what time frame that you want to trade in. Now, I don't use indicators. I know people love indicators. They think they're the holy grail, even though there's over 400 indicators out there. You guys all think that there's some secret magic special sauce to indicators. There isn't. Okay, price and volume, which are charts, are more important than indicators. But if you want to use a moving average or a trend line, that's fine. I don't subscribe to any other indicators. No COM channel index, no stochastics, no Fibonacci, no Bollinger Bands, no 2019 October indicator, whatever they're coming up with these days, right? I don't use these, but if you want to use an indicator, a moving average, or a trend line, could be good. You want your plan to outline, guys, your position sizing rules, your account money management rules. So what are your goals in this business first and foremost? Now remember, this is important. Most people have outcome goals. Oh, I want to make $100,000 a year and I want to do it within 2 years of trading and I want to do it in 2 hours a day and here is my $30,000 account or whatever it is. That's great. Wonderful. Outcome goals are worthless without process goals. Okay, so yeah, everybody has an outcome. They want something in life. The question is, how are you going to get it, right? So don't just write a goal down. I want this, 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 and this. How are you going to get it? I want a Lamborghini. Great. How are you going to get it? What's the process that's going to take you closer to that goal? Okay, so don't forget to put that in here when I'm talking about goals. Don't forget to put in your timeline for success. How long will this take? 1 year, 2 years, 3 years? I tell traders 1 to 3 years. Okay, on top of that, how much money you're going to start out with, how much money you're willing to lose in your account before you say, you know what, this business isn't for me, how much time you're going to give it before you quit, how much money you're going to spend on education, what platform you're going to use, okay, trade fees, all of those things, they have to be part of that goal section, all right? Then When it comes to risk level, guys, start small, please. I'm going to show you a slide in a couple of minutes, but please. I know most of you aren't going to listen to it because you know better and you have a monster ego. And I've only been doing this 20 years, but you know better because you've been doing it for 20 days. I get it. Okay? I get it. But risk small amounts of money. Why? Why do I tell people this? Because there's a really good chance you're going to lose money when you first start trading. In your first 0 to 6 months, 0 to 1 year, you're probably going to lose some money. And I don't want to hear about the trade fee thing. This is one of the most common emails I get. Well, Jared, how could somebody risk $10 per trade if the trade fee is $5? Well, if you're paying $5 in and $5 out, you're on the wrong platform, right? TradeStation, Interactive Brokers, you can pay $1 in and $1 out, $1 per 100 shares. Find a better fee structure. It's a business at the end of the day. It's a business. It's your job to find the most cost-effective approach to this business, but still using professional tools, okay? What are your maximum daily, weekly, and monthly drawdowns going to be? If you're trading $10 risk, I would recommend not losing more than $30 a day. And if you do that 2 or 3 times in 1 week, shut it down for the week. Paper trade the rest of the week. Clearly, something is wrong if you've lost 6 times your risk in 1 week. If you're risking $10 and you lost $60, you're messing something up, okay? Because it shouldn't be that way. And on top of it, one of the things that a lot of you guys do, all right, and this kind of goes to money management, is you set maximum daily loss rules and limits that are nowhere based in reality. It's like, well, have you ever made $50 in 1 day on $10 risk? No, I haven't. Well, then why is your maximum loss $50 in 1 day if you've never made that kind of money in 1 day? Think about what I'm saying. That means if you lost $50, it might take you 3, 4, 5 days just to get that back. How many of you have had that experience? You're up Monday, Tuesday, Wednesday, Thursday, and Friday, you have one bad day and it takes out all your profits for the whole week. If that's the case, your maximum daily drawdown is way too big, okay? And I don't care if it's $10 risk or $1,000 risk. The principle is the same. The concept's the same. Have entry rules, trade filters, times, patterns, the environment, the liquidity, spread. You need specific rules for all of these things. Okay, what's the volume of the stocks that you're going to take? 1 million shares a day, 2 million shares a day? What patterns are you going to take? I recommend 2 patterns. That's it. Even though I teach 10, 15, 20 patterns, I recommend new traders have 2 patterns. That's it. Why? You're going to inundate yourself with things and you're not going to learn them. You're going to be a jack of all trades and a master of nothing. And trust me when I say it, if you want to be great in this business, you need to be a master at something. And then you're going to outline specifically the pattern. We'll get to it here shortly. The environment in which you'll trade the pattern. For example, one of the reasons we traded Apple today, it had unbelievable relative strength to the market. So the Qs were going dead sideways today, and Apple was at the high of the day. Well, that was a relative strength environment for Apple, so that made that trade a lot easier. The liquidity of Apple was great. The spread was thin. The pattern was textbook. Wow. It just checked all the boxes. Don't have FOMO, that fear of missing. Oh, I got to take it. I got to rush into it. No, if you miss this one, you'll get the next one, okay? And then obviously you have to have exit rules, profit targets, stop loss levels, trade management, all or nothing, end of the day, okay? Bar by bar. You have to have some type of trade management rule. Guys, one of my biggest pet peeves in this business, and I get it frequently in the chat room, okay, is somebody gets into a trade and then they ask me what the target is. Like, wait a second. Hold on. Check yourself. You just got into a trade and you don't have a predetermined entry, stop, and target. Now, you may not know exactly where the target is because maybe it's an all-time high. But you have to have a plan, a modus operandi, which might mean 2R all or nothing, which might mean bar by bar on a 5-minute, which might mean pivot trailing on a 15. That's fine. That's a plan. But don't get in something and have no idea what your exit strategy is. Good or bad, you must have an exit strategy. If it goes against you, have an exit strategy. If it goes in your direction, have an exit strategy. If you don't, you're a gambler. And most of you are gamblers because you have mental stop losses and no idea what your target is. You let stocks go past your stop loss. We just had this happen 2 days ago. Somebody let their stop loss, their trade go 6-1 against them. That means if you're risking $100, you should have lost $100 because you were wrong. They let it go $600 against them. That's not cool. then continuing education, journaling, and tracking your trades, which I'm going to talk about today. And then obviously, guys, talking to other traders, reviewing manuals, reading books, relaxing when needed. All these things are important. Trading can be a very, very stressful business. True or false? Trading can be a really stressful business, okay? So give yourself time to recharge, relax, talk to other traders, go to a mentorship, all right? Read a trading book, read a psychology book, etc., all right? So.
Yeah, that body's a blessing, girl. I ain't trying to pressure her. She messed with the temperature. I wrote the song, but I am the messenger. Through the metropolis, there is no stopping this.
If you're new, I'm just going to state it one more time. Never risk more than, I say, $10 to $30. Some of you guys are going to have big egos and, well, you did say 50. No, I really want you to risk like $10. That's really what I mean. I just put this in here to be a little bit flexible. All right. Doing anything other than what I've suggested is just throwing money away. I don't care if your first week or your first month you made money. You go, ha ha, Jared. As I said a couple minutes ago, don't spend that money because the market wants it back. You will give it back. I just got an email a couple weeks ago from a lady, made $10,000 in her first month and lost $12,000 in her second month. I bet you that first month she was thinking, screw you, Jared. $10 risk. You're nuts. That's crazy. I'm making $10,000 this month. You don't know what you're talking about. How are you feeling when you gave $12,000 back? That's right. That's right. You should have never been able to lose $2,000. Plus 10 minus 12, that's minus $2,000. How long would it take you on $10 risk to lose $2,000? In the beginning, okay? In the beginning, that's a true story, by the way. That's a factual story. I will show you the email if you email me, okay? Anyway, in the beginning, your goal is not to make money. Your goal is to try to trade properly, which is basically to not lose money, okay? So let your results tell you when you're going to raise your risk. Professional Trading Strategies, guys, talks about this in great, great detail. How to raise the risk, how to lower risk, etc., and so forth. Why? The market doesn't care about you. It doesn't care about me. It doesn't care about anybody. The market just is. Okay? The market just is. All right. Now, when it comes to trade management, here's 3 basic ways you can manage. There's other ways you can manage. All or nothing basically means, hey, set your target, set your stop loss, and walk away. Your target, it might be 2 to 1. So if you have a 50-cent stop loss, your target's $1. If it goes minus 50 cents, you're out. If it goes plus $1, you're out. That's it. Set it, forget it. Put a bracket order in the system, walk away, wipe your hands of it, you're done. Okay? Bar by bar simply means trailing each bar as it goes up. Pick a time frame, call it a 5-minute. So when the current 5-minute bar closes, you go 1 bar back. When the next bar closes, you go 1 bar back. You're always 1 bar back on bar by bar. And then pivots, obviously. When a stock pulls back, pivots, and retests the prior high, raise your stop loss. Okay? So, things you want to consider. Where's the next area of support or resistance? What's the overall quality of the trend? Okay, which means, does it have support? Does it have resistance? What's the distance between pivots? Here's one, extendedness of the trend. Most of you guys don't pay attention to this. It kind of boggles my mind. Everybody, you see green bars and you want to go long. You see red bars and you want to go short. Well, what if, here's a hypothetical, what if the average trading range of that stock is $3 per day and today it's up $7? And you want to buy the high of the day? No, absolutely not. Could the stock go $10? Sure it could. But remember, we're odds-based traders. So the odds of it going $3 more after it's already gone 2.5 times its average trading range are slim to none. It's possible, it's just not likely. So extendedness of the trend is something you want to pay close attention to, and most traders don't. Because you all trade in vacuums, right, with mental stop losses and no targets, okay? Know what the market environment is, okay? Make sure the stock has relative strength or relative weakness, and whether or not the trade is with or against the trend. Now, why are these things important to how you manage and determine targets? Because if you're going counter trend, it's going against the current trend, so you're going to have more of a scalp target. If you're going with the trend, that trend could continue for a very long time, and therefore you might have a larger target with the trend. Stocks that have relative strength usually exceed their average trading range. Stocks that gap up, that are level 1 gaps. Level 1, what that is discussed in Professional Trading Strategies. Don't email me over it. Okay? So if a stock is with the trend, has relative strength to the market, and the market is moving in the direction of the trend of your stock, man, that might be a recipe for a monster target. So you might say, you know what? I'm going to trail this stock out on pivots because, well, gosh, it's got so much room to go. My recommendation generally, though, is choose one management and use it for all of your trades. Okay? Now,
The club isn't the best place to find the lovers, so the bar is where I go. Me and my friends at the table doing shots, tripping fast, and then we talk slow. The club isn't the
entry rules. You have to have entry rules as well. A lot of people will just say, oh, well, you buy above here and you put your stop below there. It's not that simple. How much are you willing to pay up for a stock? I find a lot of traders chasing stocks. I see it all the time in the chat room, right? We get into a trade at $180 and maybe we have a $1 stop loss. And I see people paying 180.50, 180.70. I'm like, what are you doing? Like, oh, I got in a little late. No, that's not a little late. That's chasing. Why did you chase? Let's be honest. 4-letter acronym. FOMO, fear of missing out. That's why you chased it. That's why you got in 50, 60, 70 cents late. FOMO, don't do it. Again, guys, FOMO is akin to gambling. Anytime you break the rules of the plan that we're hypothetically creating here, you're going against the statistical probabilities of success, and the odds of things working out the way you want are less likely. So, the general rule I have is if stocks move more than 30% of the size of the stop loss, pull your order down. So for example, if your stop loss is 30 cents, don't pay more than 8 or 10 cents for the stock. So if you want to get in a stock at $30, all right, and say your stop is 29.70, that's your exit if you're wrong, and the stock is at like $30.18, I'm not going to pay up for that. You missed it. You flat missed it. If you didn't get in that first 5 or 10 cents, you missed it. Anything later on is FOMO, unless the stock sets up a secondary pattern. Okay? If you get skipped or miss a trade, continue to watch it for another entry, but only on a legitimate pattern that's outlined in the plan. Period. Get FOMO out of your head, guys. This is why so many of you trade penny stocks, because you're like, well, I have a small account and I need to make money. If you have a small account, you're not a good trader. True or false? Because if you were a good trader, you wouldn't have a small account. Well, I'm just getting started. Well, if you're just getting started, you're not a good trader either. Hit me with the questions because I'm going to answer them, right? If you have a small account, it means you're just not that good. Even if you're brand new, you're not that good because you're brand new. There's nothing wrong with that. Don't take this as an ego slap. There's nothing wrong with that. So you don't have to trade $2 stocks so you can take 1,000 shares of something so you can get $1 move of it. That's crazy. If you get skipped or miss a trade, just wait for a pattern. Okay? Use a stop limit order for your entries and a stop market order for your protective stop loss. Guys, don't use stop market orders for your entries. You'll get filled God knows how late, especially if you're trading whippy stocks like Amazon. You get filled $1 late if it pops hard. Stop limit order, what does it do? Why is it important? It allows you to control how much you're willing to pay for a trade. If you use a market order, you're not controlling how much you're paying for the trade. By using a stop limit order, you get to decide the parameters and the range of the trade. So for example, in this 30-cent example up here, if I'm trying to get into a $30 stock with a 30-cent stop loss, I'm going to give it about a nickel. I'm going to give it about 6 cents on my stop limit. 30.00 up to 30.06. That's the range in which I would like to get filled. If I don't get filled in that 6 cent range, I don't want to be in it. Okay? I don't want to be in it. Use Arca Bats EdgeX. They're the most liquid ECN routes. Okay? They're the most expensive. But guys, paying a couple extra pennies for something is worth it for the better fill. Okay? As I said earlier, choose 2 strategies. Once they're mastered, you can add more tools to your toolbox. Okay? Think about that as like a car mechanic. You don't work on the whole car. You start in certain sections, right? When you're new, you might do brake jobs, doing rotors and brake pads. And then you work your way up perhaps to, I don't know, changing the alternator or changing out, I don't know, the fuel pump or something like that. Okay? And then you work into bigger things like changing the heads and doing the valves and all that other stuff. All right? Same with trading. Pick 2 patterns that speak to you. Patterns, when I mean the word speak to you, I mean things that kind of go, well, you know what? That pattern looks interesting. I'd like to learn more about that. All right? Always use multiple time frame analysis and always use market timing. All right? So it should look something like this. This is the 3-bar play. Many of you use it in here. I use it. It's one of the most common patterns that I trade. Traded it today on Apple. Traded it yesterday. Traded it the day before. Traded it the day before. Traded it last. There's rarely a day that goes by I don't trade a 3 or 4-bar play. Okay, I like breakouts and 3 or 4-bar plays. So many of you have seen this. You go, wow, I've seen this before, Jared. That was in your 3-bar play lecture from 6 months ago. Blah, 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 right? Yeah, it's true. But here's what you have to do. You can't just put this little picture of a pattern. Don't get me wrong. You need a picture of a pattern. You need it. But this is just a picture. We need to dig inside of the picture so that we can see and understand what's really happening here. Let me explain. So this is a picture. Print it out, put it on your wall of a perfect pattern. Great. We're on the same page. Now I'm going to
I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. But you don't own it, you phone it. You say that I should tone it. You zone it, you're out of line. You never own it, you phone it. Keep staring at the ceiling, right? Why do you take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. But you don't own it, you phone it. You say that I should tone it. You zone it, you're out of line. You never own it, you phone it. Keep staring at the ceiling, right? Why do you take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. But you don't own it, you phone it. You say that I should tone it. You zone it, you're out of line. You never own it, you phone it. Keep staring at the ceiling, right? Why do you take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. But you don't own it, you phone it. You say that I should tone it. You zone it, you're out of line. You never own it, you phone it. Keep staring at the ceiling, right? Why do you take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're mine. But you don't own it, you phone it. You say that I should tone it. You zone it, you're out of line. You never own it, you phone it. Keep staring at the ceiling, right? Why do you take all my time, time, time? Why do you fake all your pain, pain? Why do you tell all these lies, lies? Guess you really have no shame. Why do you take all my time, time, time? Why do you fake all your bang, bang? Why do you take all my bang, bang? I'm paralyzed a moment. I think I'm all into the moon and back. Overwhelmed with love, I shiver when you say you're